Welcome to the Modern Savvy CPA, where financial expertise meets the cutting edge of digital age. I'm Sherron, your host, a certified public accountant, here to guide you through the intricate web of numbers and regulations, offering a fresh perspective of the ever-evolving world of finance. So hi, this is Sherron, the Modern Savvy CPA. I want to tell you guys something. I'm a tax accountant, so I want to tell you guys today we're going to talk about taxes and small businesses, taxes and businesses. You also need to understand the difference on your book. Are you a cash-based taxpayer, or are you an accrual-based taxpayer? What that basically means is that when it comes to your corporate tax and your corporate income, timing is a big issue. When it comes to accounting of your company, you need cash-based and accrual-based is there's a basic timing issue. The timing of when you are recognizing revenue and when you are allocating your expenses. So, if you're a cash-based taxpayer, your revenue is recognized when the cash is come in and when the expense is paid. If you're an accrual-based taxpayer, your revenue is recognized when the revenue is made. That doesn't necessarily was paid, so you could have outstanding accounts receivable that you have to pay tax. You're paying tax on, and it works the same with the expense. You could have expenses that are accrued, they're incurred, but not necessarily paid yet. You can take advantage of that as an expense on there. So you need to understand those things. There's also compliance when it comes to whether, different schedules you have to fill out, whether you have to do an M1 schedule or an M3 schedule, all that stuff. Lastly, one of the other things that we're going to talk about is, like I talked about, payroll, employment tax, businesses with employees that they need to comply with several different employment issues. We want to make sure that or withholding tax that we're withholding from the client's paycheck, the Social Security and Medicare we're required to pay, that we're doing that on time. Failing to do this properly will lead to audits, serious legal issues, financial issues. They will levy you. The IRS will levy you. They say in 10 years, within the last few years, the IRS has levied fines of over $6 billion for compliance with employee-related penalties, interest, and notice. That's not even the taxes. That's just penalties on notices and on employment taxes. So like I said before, that is the one that I see that they will come and knock at your door for. The last thing that I want to talk to you about is independent contractors. So we need to that's one of the things now that I'm seeing the IRS is definitely tracking down on. They're asking us as the tax preparer, as the CPA, to whether our clients are complying with the 1099 rules. The 1099 rules are ever changing. The 1099 NEC is non-employee compensation. Are our clients hiring contractors? Are they being compliant when it comes to tax time about the 1099s? Are they filing the 1099s? They're asking so many questions about that now. You can always look up on irs.gov what are the requirements for filing 1099s, but they're asking your tax preparer or your CPA to ask you this question. And if you say that, if you tell your CPA that you are being compliant and you've done what you had to do, then, that's what the CPA is going to report. The onus is up to you as the small business owner. They are required, your tax preparer or CPA is required to ask you. If you say yes or no, they are only required to record what you told them. They're not required to track down and see if that has happened. So you as the business owner will be the one that will be reliable for payroll withholdings if you're filing 1099s and that person should be an employee, or if you're not filing 1099s at all and you're paying people over $600 and there are other rules that are involved with the 1099s, then that's going to be, I totally see that's where the IRS is going to get their, our deficit, our national deficit is going the 1099s that are not being recorded, and for those people who are not paying taxes on money as contractors, those are the people that are going to get caught in that one. So, you want to make sure that you're doing all of that. You're And last but not least, you want to make sure that you're filing your stuff on time. You're filing your business returns on time. You're filing, if you have a fiscal year, you're using the fiscal year stuff. You want to make sure if you have quarterly estimated payments that you're doing that on time. You understand the deadline for W-2s, 1099s, S-Corps, LLCs, partnerships, C-Corps, quarterly payroll taxes, whether it has to do with your state or the federal government. You want to make sure that you're doing that. You want to make sure that you understand the business. You understand the rules that you so that you're taking steps to be responsible for this, because a lot of business owners are pretty much trying to get their bookkeeping together. They're not looking so much at their tax compliance. So you want to make sure the first step is getting your budget and your bookkeeping together, and making sure that you're doing all those things properly. But you have to make sure that you are talking to your CPA and talking to your accountant or your payroll company or your tax preparer about being compliant and when is the right time, because you don't want to pay those hefty penalties. They're total waste. By just following the timeline and understanding what you need to do, then you are able to take advantage of not wasting your money on these penalties and interest. Take advantage of knowing what's happening within the tax law. You don't need to know everything. You just need to know, the basic things that you need to know. The deadlines. You need to understand how you can maximize your taxes. You need to see, your profit, and you need to how you can minimize your tax liability. You need to be talking to I advise companies to do reviews with their tax advisor, with their tax consultant. Because that's actually where you understand where you're going to save money and how you don't. If you're going to be doing it at tax time, it's almost too late to be doing it then. Number one is the tax preparer does not have time to be doing tax planning with you then. Number two is there's a lot of things that you could have taken advantage before the end of the year. And once the year has ended, you have missed out on some of those deadlines and some of those credits and some of those things. So you want to be able to do your tax planning, because the tax planning is the key to make sure that you're not going to owe any penalties and interest. And it's making sure that you're going to maximize your profitability and minimize your tax liability. So this is the Modern Savvy CPA. And this is why businesses should comply with their tax compliance. They should comply with their tax rules in their state and the federal government, and understand that once you're doing this, you break out of that bad money habits and start using the smart money habits that we've just discussed. Thank you so much for tuning in. As always, feel free to give me a follow to get updated on new and upcoming episodes, and listen in every Tuesday and Thursday, where I teach you smart money habits so you can make better money choices with a financial goal focus.